Hey there, welcome to Contracts and Chaos. My name's Alyssa.
And I'm Brenna, and we're here to tell you that you are not alone in the mayhem of this real estate industry.
We're keeping it real and sharing our stories, strategies, and successes in today's real estate world.
So come join us every Tuesday while we talk contracts and chaos. Okay, we are recording now, so I'm going to go ahead and start with the introduction of our guests today. We are so excited to have Karyn McAlpin here with us. She's with Atlantic Coast Mortgage, and I have been lucky enough to work with her. Gosh, I think we're going on almost 4 years now, and she is such an insightful and intuitive person for clients and as a friend. I'm lucky to call her a friend as well. But today we are going to be talking about her very, very special niche market in her industry, and that is down payment assistance. She works with several down payment assistance programs across North Carolina. Some, I remember one that she did, she got like $50,000 for her client before closing, which was amazing. She's been in the industry for more than 25 years. She's local to us, and you know how much Alyssa and I preach
Yes.
local lenders. So we are so excited to have Karyn here with us today. Karyn, I would love to hear a little bit of your backstory and how you got started here in the mortgage industry.
Well, I have been in the mortgage industry, 30 years now. I started in 94. So I started out in the banking world with the big banks. Back in the day, it was Nations Bank, then became Bank of America, and then through several attritions, I decided to go to a smaller company to do my business because I feel like it gives me more power and more control to be able to deliver better customer service to my clients. I started out in a very small market in Salisbury, North Carolina, very much first time home buyer. Did a lot of manufactured housing during that time frame. Those are always fun too. But in doing first time home buyers, I became very well versed in a lot of different programs that help first time home buyers qualify. For those that either are credit challenged or resource challenged or even income challenged, to help them find the tools and resources to help them become homeowners despite those would-be challenges.
That's amazing.
And for the record, I was one of those people.
Indeed, you were. That was a long time
Saved
ago,
my
but
ass. I will never forget the day, Karyn. It was like 3 or 4 days before closing, and you called me and you were like, "What's all this money?" And I was like, "What money?" And it was like gig work I had picked
yes.
up. Um, and so you were like, "Tell me it was a one-time thing." And I was like, "It was a one-time thing." But you got me, and I always tout this, like, you got me, other than inspections and due diligence stuff, I closed with a check for $500. That was all I had to bring to closing. It was amazing.
Yes, and a lot of my clients get to experience that same thing. That the challenge, or I guess the particulars of down payment assistance, is that you do have to meet very specific criteria, most of which have either income limitations and or acquisition limits. So it could be the sales price in addition to your income, that you have to meet a very specific box, a very specific criteria in order to qualify for those different types of programs. And there's way more now than there was back when we helped you with your purchase. The good news is it's becoming more and more prevalent because there are a lot more programs that have been added to the mix now to help buyers qualify, simply because there is such a great need between what people are earning as far as income and what housing is currently costing to help them qualify to buy.
So speaking of which, can you give us a quick rundown of like what programs you usually work with and who they're designed to help? Like obviously I was a young professional at the time. I'm old now, but I had like a ton of student loan debt and nothing saved, but we made it work. So who are these designed to help?
Okay, for the most part, they're designed for first-time home buyers. First-time home buyers are basically those that have either A, never owned a home in their entire life, or B, first-time home buyer can also be someone who has not owned a home in the last 3 years. So when you go from owning a home and selling it, and let's say you rent or move into a family property or what have you, where you're not paying a mortgage that's in your name, then you do that for 3 years. And let's say on year 4, you decide that you want to buy a house again. You technically qualify for that first time home buyer category once again. And then what programs you are qualified for at that point are based on your income, debt to income ratios, and credit again. So you basically start over as a first time home buyer after that 3 year period and look to qualify for those programs if you need them.
Which honestly can be so cool. I closed a deal last year that was very similar. They had no idea. They're like, no, we can't be a first time home buyer, but they had actually lived in their, I think it was their aunt and uncle's house for several years, helping take care of her. And they ended up qualifying as first time home buyers again, which was amazing for them. They got the great FHA rates and down payment and all of that good stuff. But this is down payment assistance, I feel like goes along with VA, FHA. There's so many misconceptions and negative nuances to it. So, what are some of the biggest red flags that you see people throwing out that aren't necessarily true about down payment assistance programs?
Well, first of all, people think that they aren't worth the time. And I'm not trying to throw loan officers under the bus, but a lot of times loan officers just simply don't want to learn that type of product scope. They are definitely more challenging. They are definitely more complex. And I call them layered onions because the deeper you dive, sometimes the harder you cry. Because sometimes those extra layers, such as Alyssa's case, where there was extra money coming in, there's certain programs that require you to not exceed an income threshold, right? So if you go above that income ceiling, then that could disqualify you. So when I was talking to Alyssa and she was making that extra money, which you would think would be a good thing, right? Because you want that extra cash flow to be able to make your bills and pay your bills on time and things like that, or even pay off debt or things like that. But if it adds to the qualifying income and puts you over that income threshold, it could then disqualify you for the program. So a lot of times the nuances and the different types of, I before E, but not after C kind of thing, all the little caveats are very quirky, and you have to be able to find a loan officer that is well versed and well experienced in those programs to make sure that when they say you fit this box, you actually fit that box and you don't go outside that box. And there's different programs with different qualifiers. So you may go for North Carolina Housing's First Home Advantage, where it gives you $15,000, but that's based on total household income, right? So that means even if the husband is the only one on the loan, but the wife makes money, even if it's a side gig babysitting and there's extra money going in, that counts. Or if they receive Social Security for a dependent elderly parent, that counts as household income. Child support, alimony, anything that you do that contributes to that total household income, even though that person may not be a borrower, but as a spouse, they bring money into that household, that could disqualify them. So you have to be able to make sure that you work with someone who's very well versed. Now, there's other programs through North Carolina Housing that simply qualifies you based on single borrower income, regardless of whether your spouse brings in money or not. So when you work with a loan officer that has that experience, they take your complete picture. I call them puzzle pieces. I get all of your puzzle pieces up front to be able to figure out which picture fits you best to get you qualified for the programs that can most benefit you without you exceeding those income limits that they then set to be able to help you achieve getting those funds for assistance.
And that's one of my favorite parts about working with you and having clients talk to you is you're not just trying to fit them into this either, conventional or FHA box, um, and be able to speak to the different loan programs and explain to them how this might not be a benefit to them, how going this route will actually set them up for a better success down the road, those kinds of things. And communication is such a huge thing when it comes to lending. I mean, this whole industry as a whole, but um, having somebody who is able to explain to you what, when, why, and how is so important, especially because most of these down payment, and correct me if I'm wrong, most of these down payment assistance programs are used for real first time home buyers. Like this is the first time that they've gone through something
For the
like this.
majority of the time, yes. So in North Carolina, housing has specific criteria like a minimum credit score. But the caveat is when you use their program, you're also subject to their interest rate. So they set the interest rate when you use their money. Then there's other programs out there that if you don't necessarily meet that income criteria for North Carolina housing, we also have other investors that do offer secondary financing to do up to 100% financing for a home. Say layer it with FHA, and for those that don't know what FHA is a government program that allows you to put as little as 3.5% down. But I have one investor that will actually give you that 3.5% down payment as a financed second, and their credit score is a lower threshold, but the interest rate reflects that. But if you've got the money to make the payment, then you can actually leverage that program to get into the home with little or no money out of pocket as well. So again, it's one of those things where when each borrower comes to me, when my realtor partners send them to me and they're like, okay, I think I have a client that's a first time home buyer, they might have credit concerns or whatever the case may be, I take the time to do a little bit of a deep dive into number one, the credit. That's the first and foremost because that's a fail stop. If your credit doesn't meet the minimum criteria, we got to work to get it where it needs to be. And I can help with that too. If once we know we've got the credit where it needs to be, then we add in the income layers to determine which product is going to be the best fit. Now that's to say, if you do have funds of your own that you can invest, using a first-time homebuyer loan with down payment assistance might not always be the right solution. Because if you've got the credit and you've got the funds, you can actually get better pricing and you can get better terms if you use your money. If you put your skin in the game, then you have the ability to negotiate better terms on the pricing and the closing costs and how you leverage money you have in the bank to be able to get you the best deal with that seller. And that's where you guys come in to help them figure out how to strategize and make that work for them.
So you brought something up a couple answers ago, but that you don't have to be a first time home buyer. You've piqued my interest because one, I thought it was 7 years, and I think that depends on which loan program you're in, like which, because especially the state one, it changes every year. Um, but what are the programs for people who've owned a home but need that financial assistance?
So North Carolina housing, again, if you've not owned a home and they look at the tax returns for the last 3 years to see if you reported any mortgage interest as a primary residence to confirm that you've not been a homeowner. Now, there are caveats and exceptions to that rule. Veterans can have sometimes an exception to that rule. If you've inherited a family property, sometimes there can be an exception to that rule. Again, those are quirky one-offs that we work with on a case-by-case basis. But the 3% down payment assistance through North Carolina Housing doesn't require you to be a first-time home buyer. Now you get the interest rate that goes with that because you're using their money to fill the gap that you need. The other investor I was explaining a moment ago with Essex, they allow you to do that 3.5% down using FHA with a 3.5% financed second to give you 100% financing because you don't necessarily have that 3.5% down. On that particular program, we can actually do manufactured housing as well. So that's a nice little quirk.
It's
Um,
huge. It is
it
huge.
is, it is, and that can also be a blessing and a curse when it comes to financing manufactured housing because it too has to meet specific criteria when it comes to it being classified as real property, that the VIN number has been surrendered with the DMV, all the fun quirky things there. But again, somebody who knows how to do that, a loan officer that's experienced with those kinds of things is who you definitely want to reach out to and put your trust in because they're the ones who have had that experience to be able to get you to the finish line without, running headlong into a brick wall. You just simply want to dot your I's and cross your T's to make sure before you make that offer that certain things are in alignment so that we don't waste money on due diligence in the state of North Carolina, without knowing that we've got all of those hurdles already either done or in the works so that we can make sure that we can meet the terms of the contract.
I ran into that with some clients who ended up ghosting me because they were looking at manufactured stuff and they were using assistants. And I kept, before I would even show it to them, I was like, we have to run this through. Like, I need these questions answered because I'm trying to save you from losing due diligence or getting down the road and finding out. And maybe I was explaining it wrong, but I explained it 100 different ways. And was more like they got frustrated because like, you keep telling us no. And I was like, I'm not telling you no. I'm just telling you the way your finance like approved for this house doesn't qualify. So we need to find one that does. I'm trying to protect you. And that can be a hurdle.
It's truly the hardest conversation to have with buyers.
Yes. Well, and that's the reason why when you guys partner with your trusted lender and that client chooses to work with that trusted lender, they have a team that's working in their best interest, not just you as their realtor where they get frustrated because you're like, no, 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 no. Well, I can help bear that same burden and say, look, this home isn't on a permanent foundation. That's not going to work when it comes to financing this property for real estate and a mortgage. So again, where that partnership comes in so that you guys can provide that information from two different sources so the client better understands. And I may explain it differently than you that makes it click, or you may explain it differently than me that helps make it click. That we're looking out for their best interest because at the end of the day, we work pro bono. We don't do this, just for giggles. We actually want to find a home for them and go under contract to help them get to the closing table because it's only then that we get compensated. So all of our work is in good faith and with their best interests at heart to make sure that they do get keys and they do get to move in to the home.
I know that first responders are near and dear to your heart. Your husband is a firefighter, and we do love that. We appreciate him a whole bunch. But for those community people, our teachers, our first responders, those kinds of things, are there special programs for those people within the down payment assistance programs? I know that sometimes you personally will offer incentives for those people, but as far as for down payment assistance, is there anything specific?
Typically, unfortunately, there becomes a fine line between what is offered as a special incentive and what can be misunderstood as discrimination. So a lot of times it has to be done across the board.
Mhm.
And it's intended to make sure that everybody is treated equally, of course. But there are some programs, like certain municipalities may offer grants. I know, like there's certain towns in our local communities that offer an additional grant that can be layered with these down payment assistance that can be offered to either town employees or, like you said, police, fire, medic, healthcare workers, teachers, even. There are some programs out there which you guys know there's different incentives like Teacher Next Door, but I think there's a certain caveat to that particular program that you guys have to invest some of your portion of whatever to help offer that incentive to that particular buyer. But there are different programs that can be layered, multiple layers. So we spoke earlier, you mentioned the $50,000 down payment assistance. So North Carolina Housing offers their first home advantage, which is the 15,000 currently, and they're 3% for move-up buyers. But for those first-time home buyers that are even lower income spectrum, there is an additional layer of down payment assistance called CPLP, short for Community Partners Loan Pool. So that is an even lower income bracket that helps those buyers qualify with up to an additional $50,000. Now, that is 25% of the sales price up to $50,000. To get that $50,000, you have to cross the $200,000 sales price threshold. But that can be layered with the $15,000 and then give you $65,000 to help lower that um, loan amount to the point where you can actually qualify for that payment for those that are even lower on that income scale. There's also additional programs. Another one that's coming out right now, FHLB, which is Federal Home Loan Bank of Atlanta, is coming out at the end of February. And this year, their program allows another 17,500. And then, like I said before, there's municipality. There's different programs that are offered for those that work in first responder roles. Dream Key Partners in Charlotte, they offer House Charlotte, and there's different layers there that could possibly be layered into that. So you can stack them if you choose to do that. But it's an onion, but we get through it. We can layer them 5 deep if we need to.
I'm glad you brought that up because I was going to give you a very friendly hard time. To be like, because you brought it up at like a continuing ed, I think I sat in like 2 years ago now, maybe. And I remember sitting there being like, I didn't get $50,000.
It wasn't available then.
Well, and that's what I figured, but I'm glad you said like it's for more lower income, which I would not have hit at that point. Like I had a great corporate salary. So, but I've always wondered, I've been like, I need to call Karyn and be like, yo, you owe me 50 grand. Because
not Alyssa
like,
being salty about the
just a
home buying
little.
process.
But there is, and actually I need to call you because it got brought up yesterday. There's a new agent in town, and she was like, hey, I heard the city of Gastonia has this program. And everyone was like, oh, it's the state thing. And I was like, no, 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 no. It's the city. It's a grant. It has to be within city limits. But I can't find a lender who's approved for it anymore.
Well, typically if it's a grant, it's just layered in. Usually grants are just simply put on top of what's already being offered.
Yes, you can, and from what I understand, you can layer it with like the North Carolina first time. So I'll call you. I'm also going to call Christy Ferguson about it too, because I'm sure she knows, because she knows everything about real estate in Gastonia. So she's a queen.
So the thing you have to remember too is there are certain programs that are funded initially at the beginning of the year, and sometimes those funds, once they're tapped, they run out. So like the Community Partners Loan Pool last year, it tapped out in August. So all of my buyers that were looking to use that program had to put their home buying journey on pause until January of this year to pick that back up and find a home to be able to layer that in.
Well, and they really messed up last year or the year before. They had people who were under contract with those funds, and they miscalculated what they had and who was under contract, and people lost houses over it. Like I know one personally, like she was using that and she was like a week out from closing, and they called and like, we don't have any money anymore, sorry.
Right. Well, see, and that's just it. Through North Carolina Housing, I'm able to do that reservation up front. So Community Partners Loan Pool is an extra layer that requires extra work on the part of the buyer. They have to go through a specific course, for lack of a better way to put it. They have to talk to the community partner to vet them. They go through a budget, they go through their credit, they look at the same income docs I do, they get them qualified. We basically run parallel, and then when they go under contract, then that's when they can actually, I guess, for lack of a better way to put it, reserve the funds, or they should be reserving the funds to be able to commit to that. But if you're getting $50,000, those extra hoops are probably needed, number one, and number two, necessary, because that equity block that they give you, the $50,000, basically just takes the sales price and the loan amount down to a certain point to be able to block that equity with that down payment assistance, and that lowers the loan amount to help you qualify. The $50,000 does not have a payment that is due on a monthly basis. However, if you move out of that home, you refinance that home, or you sell that home, that $50,000 goes back to North Carolina Housing. So that money doesn't stay yours. You don't get to vest it. You don't get to have it forgiven. The $15,000, however, does allow you to vest that over time and have that equity forgiven. if you sell it, move out of it, or refinance it within the first 10 years, you do have to repay it. But in years 11 through 15, you vest it. You earn that equity at 20% per year. And by year 15, if you're still in that home as your primary residence, which sometimes happens, but very rarely, that $15,000 stays as your equity from that point forward.
It disappears. It sits on
That's right.
it sits as a second silent mortgage on my house and it doesn't gain interest. And that is why you did not see Alyssa refinance in 2020 and 2021 because I have a 5.5% interest rate. And I was like, nope, sitting pretty. I'm not paying back
Well, here we
$15,000
had
right now.
one, I had, I'm going to date myself. I'd probably say close to 15 years ago now, where the down payment assistance was actually $8,000 and the rates were in the 7 and 8s. And when the rates dropped so low, my clients actually benefited from
Oh,
refinancing
yeah.
to the lower interest rate and wrapping that money into that new mortgage, because even with the lower interest rate and that money added back into that combined first mortgage payoff and that down payment assistance, they came out better. So that is a very rare one off that actually worked in their favor. But again, when clients finance with me, hopefully they stay with me. And when they do decide to refinance or something like that, they contact me first. My goal is that they trust me for life to help them with those, moves, whether it's a refinance or purchase of another home or whatever the case may be, so that they know that they can trust me to give them honest feedback on when is the best time to refinance. A lot of my clients right now, they keep saying the rates are dropping and things like that. And I was like, let's just do a number crunch and know what that rate needs to be for you before we actually pull that trigger. Don't fall for the trap that it's lower when in actuality, yes, it looks lower on paper, but it still doesn't net you but $20 in savings per month. So you just want to make sure that when you work with a lender, you work with somebody that you can trust in any situation with your finances when it comes to a mortgage.
I'm
Amen.
I'm going to sneak a question in here that's not on this list because you said something and I just want some clarification. You said if you don't sell, refinance something on your primary. So with it, this always has to be like, what if I, or anyone in general, not necessarily me, wanted, wanted, they had bought it with a down payment assistance, like a first time home buyer, and 5, 6, 7 years into it, they were like, oh, I'm ready to move up and I want to use this as a rental property. Are they going to be in
You'll
trouble?
have to repay the down payment assistance.
Okay.
And the reason why is because it's no longer your primary residence. It then becomes an income producing property. And
Okay.
people are like, well, how are they ever going to know? You escrow.
That was going to be my question on the phone later.
You escrow for your property tax insurance, right? And your property tax
Mm-hmm.
insurance shows whether it's a primary residence or an investment property. And if they get that renewal and it changes from a primary residence to an investment property, they're going to be like, my little borrower's not
Okay.
living there anymore. And they're in
Okay.
year 8 of 15. So
Oh, is it 15?
yours might have been part of the 5-year special. So we would have to go back and look at that.
Yeah, I'm going to have to look at that. We're going to have to look at that.
We're gonna have to look at that for
Uh,
self-employed buyers. Because I mean, Alyssa and we're
right.
self-employed buyers. There's a lot of, especially I feel like since 2020, so many people working from home, working for themselves, 1099, that kind of thing. Are these down payment assistance programs able to work with those kinds of buyers, using like bank statements or something along those lines?
Okay, so the outside the box type programs where there are bank statement loans or 1099 or P&L, that kind of thing, this is not going to be a layer that you can add to it. So this is something that, as a self-employed borrower, you file a Schedule C or an S corp or LLC, whatever it is, and we look at the tax returns and analyze it and qualify you based on standard income docs to be able to use the down payment assistance programs. So if you're looking to do a more creative income proof to qualify, they're not going to take a bank statement loan. They're not going to take a P&L or anything like that, unfortunately. It's a double-edged sword for self-employed people because, obviously you've got the cash flow, but when it comes to time to file your tax returns, you don't want to have to owe Uncle Sam your arm and leg and firstborn child. So you try to write off, the business expenses that legitimately, took away from that income, but that can also, reduce your income threshold to the point where you may not qualify for a loan in the first place. So again, that's where you trust a lender to do that analysis up front to help you determine the best path to help you accomplish what your goal is to purchase a home.
What are the most common qualifications that you see as far as across? Because I know there's many, many different programs, but as far as credit score, income limits, I know you mentioned that some can do manufactured housing, but most are single family, if I'm remember correctly. What are those qualifications that you see most
So North
often?
Carolina Housing, their minimum threshold is a 640 middle credit score. So what I mean by middle credit score is there are three credit bureaus, Equifax, TransUnion, and Experian. And we get three credit scores. We throw out the high, throw out the low, and the middle is what we use as your representative score. Now, just because you meet that credit score criteria isn't a, isn't a given, because then we look at the credit history too to make sure that all of the other factors meet the guidelines. So that is what we use for North Carolina Housing. The other program where we can do the 3.5% down with a 3.5% second, that is an FHA loan, and we can go down as low as 600 on that particular program. The interest rate, of course, will reflect that risk. But again, if you've got that cash flow to be able to offset the payment, then that can be a good resource for that. The income limits vary from county to county with North Carolina Housing. They do have a specific website. So a lot of times when I am talking to a borrower and they are between, let's say, Iredell County and Catawba County or Iredell County and Mecklenburg County, I caution them, especially in some of the counties that have lower income thresholds, and they're using that CPLP layer that has that even smaller box that they have to fit in. I make sure that they understand that those income limits will be applicable in this county or that county as they search. So we make sure up front when we do that pre-approval that we know what our what our box has to be when we're looking for a specific home. Now, as far as the homes are concerned themselves, North Carolina Housing does not allow manufactured home unless it is brand spanking new, and that has to go FHA. I'm going to double check that, but I am 99%
I say
certain.
they just changed that, right?
Yes. So, well, I don't know that just changed it, but recently added it. So it is a very specific criteria for that. But those are very few and far between. So when somebody's looking at manufactured housing, wanting to use down payment assistance, that's when I specify, okay, this is possible, but this is exactly what you have to do in order to meet that qualifier. Now we can still use those programs with single family residence, townhome. We can even do condo, that kind of thing. This can be layered with all four loan programs. It can be conventional, it can be FHA, it can be USDA, and it can be VA. Now we know that USDA and VA both allow up to 100% financing. So people often ask me, well, why do I need down payment assistance if I can do 100% financing? Well, the down payment assistance first would offset the closing costs that would be due. So when you're working with your realtor, they can help you strategize how best to make that offer and what you want to ask of the seller as far as sales price and or closing costs contributions. And then we take the difference and lower the loan amount so that then that improves the payment and gets you, into a lower payment qualifier so that it's more comfortable for you to qualify. Um, Again, when you layer in all the extra stuff, then it can continue to lower that payment to help you qualify for a more comfortable payment.
Yeah, that was one of our questions as far as veterans and USDA because they are 100% financing. So I do feel like people immediately discount down payment assistance because it's 100% financing. They're not putting a down payment on there. So that's That's
Well,
super
the other
helpful.
thing
And
too is the fact that it's called down payment assistance doesn't restrict it to just the down payment. The good news
Right.
is it helps cover the gap when there is a down payment, but it can also be used to lower the, offset the closing costs, and help you be able to do additional things with the lowering the sales price if you're not asking the seller to help pay those closing costs. You can just strategize on how you want to structure that offer to get the best deal you possibly can.
Well, and I think there's a misconception with the public that down payment assistance or zero down financing means there's no money out of pocket. And I've hit that hurdle where like people will get approved online, some random Joe Schmo, and then they send them to me because they're partnered with a realtor out of town who only does referrals. And they come to me and I'm like, well, you still have inspections, appraisal costs, all those things. Well, can't we finance that? And I'm like, no. And they haven't shown them, okay, this is the cash you're actually going to need to close. And one of them told me, well, my friend closed with zero money, like out of pocket. And I was like, that must have been some real special program. And I don't know that it exists anymore. But would you like to talk to a local lender who would know the local programs? No, we're approved. And I'm just like,
That's hard.
okay.
It's very hard because
So
they
there's,
can be led down a path that could be a path of disaster because there is no such thing as no closing costs. I mean, I'm sorry. I'm just,
can you say that one again louder for the
you
people
say
in
it
the
louder
back?
for the people.
there is no such thing as no closing costs because
Thank you.
let's, I mean, the point of the matter is there is, especially first time home buyers, there's always going to be an appraisal. Sorry, not sorry. There's going to be an appraisal and that incurs a cost. The lender is likely going to charge you either an application fee or a processing and underwriting fee. So depending on the state, I lend in North Carolina, South Carolina, Virginia, and Georgia. South Carolina has processing and underwriting. North Carolina has an application fee. So it's basically offsetting the lender's cost to produce that loan for you. And then when you go to closing, especially North and South Carolina, it's you close with an attorney. I don't know of any attorney on the face of this earth that's going to be doing that work for you for free. They're going to be charging you to do the title research and make sure that when you buy that property that all the outstanding loans and liens on that property that the seller may owe is paid for before you put your new mortgage on it. So there are going to be closing costs. And then I don't know about you, but the county is not going to record the property in your name on their books at the county courthouse without charging you a fee to put that on record. So there's going to be closing costs. And when they say no closing costs, a lot of times all that means is that they're bumping up the sales price or they're bumping up the loan amount to roll that in. Now you can't do that on a purchase. The only way to strategize that is if you pay a fair price to the seller that allows him to then be willing to help pay some of your closing costs. Now, if you want to lowball that seller, the likelihood of him being willing to pay some of your closing costs is not as great. But if you offer a fair price, then there is a negotiation tool where you are offering a fair sales price, then he or she may be willing to help offset some of those closing costs. So in that respect, it kind of feels like you're financing the closing costs, but it's in the way that you structure the fair offer to get the seller to feel like they can contribute to that because the seller still needs to net his bottom line to take his equity with him to the next property that he wants to purchase. So a lot of times I think people get so set on getting the lowest sales price possible, but then they forget that they've got to come out of pocket for the closing costs when your trusted realtor is trying to help you in negotiating the best deal possible. It's do yourself a favor. Listen, it's not that we want to get you a higher sales price because it's going to line our pocket. It's meeting the goal that you've explained that you need to help you buy this house that you don't have closing costs. So talk to a lender that offers down payment assistance, or you want the seller to help pay some of your closing costs. Then let's offer a fair sales price to make sure that we can help get that to help offset your closing costs. We're out here to help make this happen and we're your trusted experts. So trust us with the advice we give you And especially when your realtor says, talk to my local lender, because the local lender also knows what programs and products and caveats come into play in Salisbury, where the taxes are due in July, in Rowan County compared to September in Mecklenburg County. So there's things that local experts have more knowledge of than somebody that you're calling at Rocket Mortgage or 123 ABC Mortgage online, just because they dangle this shiny carrot that looks like a pretty rate. They might be charging you $20,000 in origination charge. And you're like, wait, where'd that come from? But I'm getting a 5% interest rate. Yeah, you're getting a 5% interest rate because they're charging you so much in origination fees. So a lender should always give you an estimate up front. Sorry, not sorry. You gotta know the numbers. And if they're not willing to provide you the numbers up front of what your pre-approval looks like on paper, as far as closing costs, down payment, and your monthly payment breakdown, then you shouldn't be doing business with them, because they're not giving you the full picture so that when you go to closing, you're not surprised by what those numbers actually turn out to be.
Yeah, I feel like so many people are like, "Oh, I'm pre-approved for 300,000, 350,000," and then they realize what that monthly payment looks like, and they're like, "Oh God, I can't afford that."
The thing about it is, from a lender perspective, we look at only what's on the credit report and what you may owe in a settlement, let's say child support or alimony, right? We don't know that you pay $1,000 a month for daycare. We don't know that you paid for your girl to go to a private school. I mean, we paid for Hayden to go to a private school. Well, that impacts the budget. Well, I don't want a payment at my max when I know I've still got to pay tuition over here, because then I can't afford both. So those are things
Right.
that we don't necessarily factor into a pre-approval, but you as the buyer or would-be buyer understands in your monthly budget that you need to still allot for daycare. You still need to allot for your Starbucks addiction or whatever the case may be, so that you can afford the house you live in and you're not eating Campbell's tomato soup every night for dinner.
I remember when I got approved, you approved me for like 300 or 325, and I laughed at you. Laughed because I was like, there's no way. Like, yeah, technically but no. And I remember saying, I'm not going over 150. Like, let's talk payments. I'm not going above that. Like, sure, that would have been a great house, but it wasn't realistic for me. And I was so glad that I like asked you to walk me through, okay, what do the payments look like? What? And I think that's one thing I always tell my clients, what do you want your payment to be? Okay, now let's work backwards, because yes, you got approved for 450, but if you only want a $2,000 mortgage payment, how much cash are we putting down here? Because that's not going to work. But I remember there was one hiccup with mine. I remember, and it was more of a I should have asked. um, I got quoted that my monthly payment was gonna be like 750, but we hadn't figured in the escrow. And so we got to like where you gave me the numbers the day before closing, and I was like, wait, why is that $1,048? Where did that money what's happening? And you were like, oh, it's the taxes and the insurance. And I was like, oh, okay. And like it was fine. I could afford it, but I just remember being like,
Well,
oh,
and sometimes
my new budget in my brain was for 750.
exactly. Well, and see, so there again, from a lender perspective, I can't read your mind. And
Right.
for from a spousal perspective, I can't read my husband's mind. I can't read my borrower's minds. So if you don't ask the question, I don't know that there's a question, and I don't know to
Right.
answer it. So when I send the worksheet and my long email narrative and it says, okay, here's what it all breaks down to and all that kind of stuff, I have to trust that you read and comprehend and then ask questions. And I tell people on the phone, I'm like, if you have questions, ask me. Start a notebook. Leave it beside your
Right.
bedside, because in the middle of the night something's going to pop in your brain and you're going to be like, oh, I need to remember to ask Karyn that. And then you forget it. But to your point, the principal and interest is only one part of the payment, right? That is simply the loan amount, the interest rate over 30 years or whatever term that you want to do. Most are 30 years these days. So add to that the property taxes and nowadays, because property taxes can make or break a payment, if it's in the city limits or if it's in the county, I ask my realtor partners to send me the MLS. The MLS is that sheet, that one pager that basically tells me all about that home, and I know whether or not there are HOA dues, and I can look up the property tax bill for that specific property. I still put a placeholder value estimate for the homeowner's insurance because ultimately that's going to be between you and your homeowner's insurance agent as far as what coverage you want. We have a minimum requirement, obviously, because we're loaning on the property and we have to have at least the loan covered. But if you've got all kinds of expensive jewelry or artwork or things like that, that could drive that insurance premium up based on what the contents of your home is. But the property taxes, the homeowner's insurance, and then for those that are doing, you know, less than 20% down, especially those with down payment assistance, there's an element called mortgage insurance. The mortgage insurance, it's called different things with different programs. So I'm just going to blanket it with mortgage insurance. Mortgage insurance is not protecting the borrower. The mortgage insurance protects the lender because you don't have a whole lot of skin in the game. And that mortgage insurance protects the lender in case you default. You pay that on a monthly basis to help protect the lender in case you stop making your payments. Now, on conventional, that mortgage insurance can eventually go away. On the other programs, you would have to refinance out of it. The other element which people do not consider a lot of times is if you are purchasing a home that is in a homeowners association. Let's say it's in a planned urban development, like a neighborhood that has sidewalks and streets and a pool or something like that, and you have to pay $50 a month in HOA dues. Or you buy a townhome or a condo and those HOA dues are $250 a month. That all impacts your monthly payment because it's considered a total monthly housing expense. Principal and interest, homeowners insurance, property taxes, mortgage insurance, and HOA dues. So there are things that you have to make sure that you are, again, working with a local lender who is willing to update those numbers for you and your realtor before you make that offer to make sure that you are not out of bounds on that pre-approval by going above what that payment max can be. I've got a client right now that keeps looking in the city, and I'm like, you can't look in the city because your payment, the property taxes alone, more than double. So that's going to lower your sales price because I have to offset that total payment has to go down in principal and interest to offset the increase in property taxes. So it's very, very critical to work with people that you know, you like, you trust, and know that they're looking out for your best interest in whatever transaction you're doing with them, whether it's a first-time home buyer, move-up buyer, investment, whatever the case may be. You just want to make sure that you know the numbers up front. It's very critical. And ask the questions. Ask the questions. Even if you have to ask it 10 times and it has to be explained 10 different ways, ask it until it makes sense. And don't just glaze over it because that could be something that is critical that you know later down the road and you're going to wish you had had that answer.
That's really good advice. We have a couple more questions as we're wrapping up here. As far as I know, for real estate agents that don't work with down payment assistance, the initial thing is, oh my gosh, this is going to take 90 days, So how much does a down payment assistance program impact the mortgage process
Okay,
across the board?
so it depends on how many layers to the onion that you add. Okay, so if it's as simple North Carolina housing or South Carolina housing, typically it's 30 to 40 days. Traditional, normal turn time, not a big deal. We status as usual. The only extra element there typically is it goes through our underwriting process at our company, and then once we get everything, we send it to that housing agency. So if it's North Carolina housing or South Carolina housing, we have to upload that same documentation to them for them to bless it. Now, when you get into the extra layers with the bigger bucks, the CPLP that's up to $50,000, the House Charlotte that's up to $30,000, whatever the case may be, they're going to have those extra hoops that you jump through. And there may also be additional qualifiers for the home that have to be met. So there may be an additional special type of inspection for that particular home to get that additional $50,000 or that additional $30,000. because they're investing their money into the transaction, we have to follow their guidelines. And because their guidelines can be a little bit more convoluted, that adds time. And in some cases, because of the less than expeditious process, they also have to like request a check the week before and for it to be picked up and brought to the closing the week after. So there's an extra time there. So usually those, I never want them to close in less than 60 days. And we have to know up front, again, that partnership, I keep circling back to that. So when your realtor comes to me and you're pre-approved for CPLP, we need to make sure, hey, this particular property is what we're going after. What extra inspections are we going to need for this particular property so that before we make an offer, we know what we don't set ourselves up for failure. So you're not going to want to make an offer on a fixer upper when you know that you're going to have an HQL inspection. I believe that's acronym. Where you have to meet certain criteria. And if there are things noted on that inspection that need to be addressed and fixed, they need to be addressed and fixed. But you, as the realtor, have these trained eyes. You know what pitfalls to potentially look for. Not that you catch it all, but you have enough experience and enough of a trained eye looking at a particular property that if there's a hole in the floor, that's not going to pass inspection. You know what I'm saying? So that's again where your expertise comes into play when it comes to the property, and my expertise comes into play when it comes to the financing piece and what layers to that onion are being added so that we make sure that we allot enough time to get from contract to closing, and meeting that expectation.
We've talked about like we're going to double check things once we start looking at houses and stuff like that. But what's the best way for buyers and their realtors like to find out which programs the client's going to qualify, and if the buyer's even thinking about using down payment assistance, like what's the first step they should take today?
I would say talk to your realtor's trusted lender who knows about that program, because I or the loan officer that you use is going to look at your financial picture and understand based on an initial conversation what your needs are. Anytime my realtors introduce me to a client, I always schedule an initial conversation with them to have a call about their employment history, a call about, what they feel their credit looks like and what their financial resources are. And if down payment assistance is something that they feel that they're going to want to or need to layer in. So that automatically sets my expectation that when they fill out that application, that I look at those elements to then refer back to you what elements are going to be in place. Me, I copy the realtor partner on all of those numbers simply because they have to be in the know on what elements are being layered into that transaction. Because number one, it helps them to better negotiate an offer with the seller and help meet the needs of the buyer, but it also helps them to better understand when they do find a house that the buyer wants to make an offer on, whether or not those extra layers will or won't meet the qualifications of the loan and the down payment assistance programs. So that's again where that partnership comes into play. Let me handle the piece when it comes to the credit and the financing and the down payment, and let me then volley it back into the realtor's court to be able to say, okay, here's where we are. This is where we're going as far as sales price, or this is the max payment, because with those extra layers of down payment assistance, the max payment is more the critical factor than anything, because the debt to income ratios have to meet a specific guideline so that when you do find that house and I rerun those numbers and the taxes are higher than what I've estimated, then that price might not be the right sales price. We may have to find something that's 10,000 less to offset the property taxes that are more. So when the realtors refer them to me, Let me gather the puzzle pieces to then help you better set them up for success when they go out there shopping and looking at the homes that they want to potentially pursue.
So it sounds like the advice that you would give real estate agents who are working with these buyers is to work with you. You know what I mean? To be a team player, because I feel I'm dealing with one right now where the buyer's agent is just like they want the deal to close, but they weren't involved in the lending transaction, in the transaction itself enough to know that we were on a really bad precipice of a cliff. you know? So, as much as you have to work with your client and show them the houses and schedule the inspections, we all have to be a team, the three of us, the buyer, the agent, the lender. And the better you work together, the easier it is for everybody. But
Communication.
if you had,
Communication. We all
yes,
have to be on the same page. And a lot of times, for me, it's good for us to have a group text as well. Just because if I convey something, I don't want it to be misinterpreted on either side. So it's sent in the same group chat so that we all know, hey, this is what needs to happen. And vice versa. When you're reaching out to me, that the buyer needs to be aware that you've talked to me, and then we're all on the same page. And we're not filtering through emails like, where did I see this or where did we see that? Is part of a conversation that doesn't necessarily happen verbally, but it's on a group text message so that you can refer back to it and everybody's got the same answer and we can all follow up for clarification within that same chat to be sure that we're meeting the expectation or we're meeting the criteria or we know what the next step is in order to make it successfully to closing.
all right,
Perfect.
Karen, it has been wonderful. We've learned so much. But share with us the best ways to get in touch with you if we have real estate agents out there listening. That is the majority, I think, of our listeners. Where to connect with you? I know you serve South Carolina, North Carolina, Virginia, and Georgia. Um, so where can we connect with you to get more information on getting our buyers hooked up with
Well, the
this?
easiest way is always by my cell phone. It's my one-stop shop. So you can call me, you can text me, you can email me. It all comes right here. And that number is 704-754-0192. That way, I'll always get your text or I'll always get your phone call. Please leave a message if you call me, because if you call me and it's a number that I don't necessarily know and it looks like it might be spam, if you'll leave me a message so I know that you're legit and you're not some RoboCop calling me and wanting my, past due tax bill for 2013 and I don't even know who you are. The point of the matter is just call me or text me. That's the easiest way to find me. And then we can follow up via email or a Zoom call or meet face to face if you're local. I'm happy to do that too so that we can discuss it and see how I can help build your business.
Anything else, Alyssa?
No, I think that's it. And thanks for helping me buy a house.
You're
I painted
welcome.
it purple inside.
All right, guys, we will see you next week. We just finished another episode of Contracts and Chaos, but believe me, the chaos does not stop here. So check out the show notes for our email address and where to follow us on socials, and we will see you next week.